Welcome. You have just entered the trading pit, your home for sophisticated takes on the crypto markets. It's April 23rd, just a couple days since the Bitcoin halving. And here in the studio, JJ and Ben Lilly of J Labs to discuss the aftermath. I am your host, Mark Conewine. Today, we're going to be unpacking the price action, talking Bitcoin mining stock opportunities, and unpacking the ongoing challenges with ETH's staking yield. But first, it's my favorite section, Rapid Fire, where I look for simple answers to complex questions. Let's turn down the music and let's turn up the commentary. Oh, yeah, another boomer joke maybe? Okay, whatever. Anyways, Ben Lilly, I'm going to kick it off with you.
Oh, boy.
The Bitcoin protocol Ruins launched on the halving. It's a new way to trade fungible tokens on Bitcoin. Is it a fad or the future?
Oh, it's a progression. So it's a momentarily fad that becomes a glimpse into the future.
Wow. He pulled out the door cat on that one. Okay.
Oh, yeah.
All right. Well, he kind of sideways his way. Okay. All right. We'll give that one to you. We're going to see where that evolves. JJ, Bitcoin halving, is it priced in?
Not priced in.
Not priced in. Oh, bold claim. You're going up against JP Morgan. I love it when you do. Ben Lilly, the New York Stock Exchange wants feedback on its plan to run 24/7 like cryptocurrencies. Is TradFi prepared to go full Degen?
No, HR will have a field day.
Oh my gosh, that is the most sane answer I think I've heard on this proposal. Imagine these guys sitting around with Red Bull being injected directly into their veins. Oh, scary thought. JJ, taking profits means going to cash, crypto, or metals?
Cash, so you can buy more crypto later.
Oh, that's the answer I was looking for. That is the one I wanted to hear. Makes my heart swell up with love. Ben Lilly, Bitmex launches 250x leveraged Bitcoin. Should they go bigger?
Yeah, why not?
What's the max they need to go to?
2,000.
Yeah, let's see it. 2024x.
Wow. You heard it here, guys. This is the next product coming out for Bitmex, the 2024 leverage product. I'm not sure if that's big enough. While I'm here, I want to give a shout out to Tyke JV, David, 251 Legacy Trail, Paul J, KS, Adrian Fleur. Welcome. Love to have you guys here. All right, let's get into the Bitcoin having priced in. JJ, you just said it wasn't priced in. JP Morgan says it's actually ready for a pullback. 10x Research agrees and said the halving has never been a catalyst for price. Meanwhile, Anthony Pompliano went on CNBC last week and argued that a supply shock is very much on the table. It's going to drive price above 100,000 K in the coming 12 to 18 months. So JJ, the question is, how do we know if it's priced in?
I don't think it's priced in. I think what happened is a lot of front running. And obviously, this kind of reminds me a lot of the discussions that we had before the ETF, right? People are saying the ETF is priced in. It's not priced in. It was just a whole lot of back and forth. But ultimately, you don't know the dynamics of new supply demand until you actually see it. So it's going to take months to play out. I think there was a bit of front running. The market's kind of cooled off over the past couple months. But I think in the year to come, we'll see more expansive price movement, because ultimately it's impossible to price in. Like, you have a 50% drop in the daily issuance, and so long as supply meets that, it's not priced in. I think we've seen from BlackRock ETFs and whatnot that demand isn't going away. So you decrease the supply, increase the demand, and you could see how price is going to be moving quickly in the coming months. So no, I don't think it's priced in.
So JJ, how much of this discussion really is too fixed on the what's happening directly the days after the halving versus looking at 12 to 18 months down the road? Because I feel like that is a very substantial part of that discussion that needs to be very specific. Like, when you say you don't think it's priced in, is that because you're saying in the next 12 to 18 months we'll see that supply shock versus what we're going to see in April and May?
Yeah, we've never seen it play out the day of. Like, it's never been an event to where all of a sudden you'd see Bitcoin run up 1,000x. That's just not the way it works. Is that you have miners effectively with less supply, so there's less Bitcoin being sold per day. And then if you add into that equation, as we've seen, so long as this cycle is like the other ones where we have increased demand, increased media attention, naturally that drifts to higher prices over time. but it's not something that, people don't buy billions of dollars in Bitcoin a day. They're slowly buying it, right? So you see that trickle effect, and slowly price escalates upwards as there isn't enough supply to meet the demand. So price has to move until it can find sellers at higher levels.
Okay. So I think it's a very simple, elegant argument for why it's not priced in. It can't be priced in, especially at a time when we're starting to see ETF flows start to settle down. We're seeing some interesting people buying into Bitcoin. We'll get to that in a moment as we start to do the market update. But I think for all those out there who are asking the question, you just had an answer from JJ if it's priced in. But Ben, I want to spend a little bit of time talking about Ethereum. All eyes are obviously on Bitcoin as we just had the halving, but Ethereum's having a really interesting time right now talking about rates, which I know is your favorite topic. We've talked on this show about the fact that ETH researchers recently floated the idea of turning the yield for staking negative once a certain amount of ETH was staked to avoid too much being staked. And of course, we have a whole ecosystem that's being built around the staking yield, including the Eigenlayer, which is looking at taking the security from Ethereum and expanding it out to new apps and products, paying out some of that yield. And then we saw an interesting quote coming from, I think, Trudov, who wrote on X, talking about that exact yield, saying Eigenlayer is facing a major yield crisis and nobody's talking about it. It goes on to say Eigenlayer has over 15 billion in TVL, but AVSs, which is part of the security infrastructure, will actually need less than 10% of that for security, which means yields may fall off a cliff. So Ben, I'm curious. I know you've talked about Pendle on the show. We're talked a little bit about Eigenlayer, which is coming out there and adding the security. And then again, this ecosystem is building around yield, which of course all investors are looking for at some level. Where do you think the evolution is for staking yield? Is there too much dependence on the native yield of ETH as people are trying to reduce that from a security perspective?
Yeah, it's a great question. And when it comes to security and the economics behind it, it's a tough question to address, because the last thing you want is for that question, you want to find out that threshold where, you know what, turns out we didn't pay enough, right? You can't really come back from that. So you do have to overpay for security for a chain because the consequences of just not paying enough and falling victim to essentially a reorganization of the blockchain is you're in trouble, right? You're not going to come back from that, most likely, especially in the current environment where you have a lot of alternatives. So is it a problem that overpaying for security? I don't really think so. I think you can kind of let the market decide that with all the yields that are available. I know there's a lot of attention at the moment with Eigenlayer and the various AVSs built on top of it. Providing all of these points is driving a lot of the activity that we're seeing right now. The points are starting to come back down. If you look at some of the fixed yields that exist on Pendle, that can kind of give you, it's too bad. I do have a chart actually that would showcase the yields of fixed. And while I talk, I'll try to bring it up. But you're starting to see those rates come on down. That's because the points are starting to come down and be less attractive. And so a lot of this attention that we've seen over the last 3-4 months is dying down. So I think, at least in terms of the FOMO and really a lot of the concerns that this might get heightened, we can kind of calm that down a little bit. But I wouldn't try to really alter the current trajectory at the moment, because if you go back to the merge for Ethereum way back in the day, like there was a conscious effort to go ahead and move Ethereum to a data availability layer in the settlement layer and allow L2s to really take the brunt of all this transaction activity. And in order to do that, you're essentially needing to have this solution like Eigenlayer that provides the ability to go ahead and rent the security for an L2, so they don't have to go ahead and, what we're talking about right here, overpay for security early on for a chain. And so if this solution allows these L2s to come on board, they start paying for that security through essentially a token or some compensate in terms of yield. And I think you can let the market go ahead and decide what the worth is there, what the value is there, allow L2s to spring up. And I made a comment on a thread, and on I believe the thread you were talking about, where they were, coming into question the cost for being paid for the security, which is how are you going to solve this issue? And I think a lot of people understand, like, there's going to be a ton of L2s that get deployed. A lot of VC capital is going to go into that, and it's going to be ghost chains for the most part. But are we all going to pretend like, hey, these are the next greatest and biggest thing? Because guess what? This is going to pay me tokens. It's going to pay me yield. To a degree, yes, like that is going to happen. And what I would caution is you don't want to be holding that back, right? And that's my comment on that thread was really targeting that, which was I'm going to take the fixed side of that sort of development and all those L2s being deployed. And I want to make sure that I sit in ETH. I don't want to sit in some token that's going to have minimal value and get driven down over time, and that ghost chain kind of gets exposed. So I know that's a long-winded way to address this security concern. I think it's valid, but I think the downside for not overpaying for security on such a important chain as Ethereum, like, it's not worth it.
So the argument here is, listen, we want to overpay. It makes sense to overpay. And I think there's a lot of researchers that are talking about this optimization. Maybe it's just easier to argue, let's overpay, which then would allow you to have more money going into perhaps the solutions like Eigenlayer that are overpaying for security. And then I guess going back to the investor mindset, I think what I'm hearing from you is you can still be playing the rates, the staked rates coming off of ETH, but looking at solutions that remain that keep your collateral in Ethereum, rather than trying to go put that into other tokens. Is that?
I think the conversation is addressing like 3.5% yield right now on ETH, and that's going to get compressed as Eigenlayer just continues to earn greater mind share. So we get down to 3%, 2.5%. As TradFi starts to come in, they want to stake tokens. You're going to have even more staked ETH, which is going to compress yields further. And what I'm kind of saying is, like, we need to expand a little bit. Like, your ecosystem isn't, and the yield associated with it isn't just on ETH and Ethereum, right? It's now supporting the L2 environment. And so you have to think of yield outside of that. And I don't think a lot of the researchers that are making these comments are really taking that into consideration.
Sure. Okay.
Like, I see lending protocols, for example. Like, to me, this is kind of how young this conversation is. I think I forgot his name, like Made in DeFi, or he's on Twitter. I forget his handle, but point is, he made a great mention that, look, I'm borrowing this EtherFi ETH. Like, who's getting the points here on this when I'm borrowing this capital from this lending protocol? I think the lending protocol was something with a V. But the point being, that was almost like a pseudo, hat tip to what Pendle has set up. Like, if you're going to start to structure these rates on these lending protocols around points and potentially like where that ETH is going to secure an L2, and that L2 is providing points or tokens, like, how are you going to structure that rate? Because now you're getting close to like creating this instrument that's comparable to what Pendle's doing. And that's going to likely happen. You'll probably see Aave and Compound and others kind of switch their mindset a little bit to that. And once we see that, this is only going to continue to escalate further.
Yeah, a lot to unpack here. I think for kind of to summarize from an investor standpoint, we're still early. There's still opportunities here. Likely the yield is going to continue to stay there for a while, but definitely keep in mind that you want to be closer to your collateral in the ETH. I know we had a question here from Toby. Please discuss potential ETH price targets. I think I'm going to cut that off rather than giving specific targets, and just say I think the consensus here is that we expect ETH to be much higher in 12 to 18 months. Rather than a specific number. All right, I want to break in and go directly into the market update and talk a little bit about the price figures that we're seeing, because we saw a sell-off last week. If you looked at our thumbnails, we were a little bit bearish, right? As we saw this sell-off and saying, okay, we think we're going to be going lower. We had the macro environment, which was looking very non-constructive. We're going to get into those outside forces. But as I went through the numbers this morning, JJ, the ETFs just had 2 days of positive flows. The GBTC bleeding has gone down. The flows are obviously lower, but I saw basically 60 million over the first 2 days, or the last couple of days going into ETF flows. So those are positive. Spot BTC was sitting at 66,000. Ethereum close to 3,200, and even Solana has bounced back. It was sitting above 150. And then when I looked at the options market, I saw some really interesting activity going into May that I'm going to want to unpack, with the strike price sitting with a lot of interest around the 8,100, or sorry, 81,000. So I'm taking the whole card here. Things look very different than they did last week after the halving. Break down, JJ, what you're seeing. Have we somehow managed to pull ourselves back from the precipice, or are we still looking at maybe going down all the way down to the low 50K in the near term?
I think it's just a range. Like we outlaid last week, we're kind of laid out those three scenarios. We have the doomsday, we have the race back to all-time highs, or we just kind of chop in a confined range, and it seems like that's what's happening. So we found the lower end of that Bollinger Band. We had some panic selling below it on both Tuesday and Thursday of last week, and then price rebounded, but we see it kind of rejected at this 50-day moving average, which is pretty critical for price and momentum if it's going to accelerate back to all-time highs anytime soon. But we basically came right up, retested it again, failed. Just prior to the Asia session, we kind of had like a low liquidity pump above 67K that quickly found its way back down. And now we're probably just going to be continuing to chop solidate in this range, probably through the end of month, I would estimate. So basically until you see like this 50-day break on volume, which is really what we're looking for to say, okay, the worst is behind us. It's over. It's going back to all-time highs. You would really want to see this break. That's around 67. Let's see, 67.5. So that's kind of the line in the sand that I see for upward momentum. Would be a break of that, preferably during the New York session. You would see some spot volumes roll in, and we would get a nice push above here. But until then, I think you just have to assume that we're in a range. Price is probably going to be chopping between, say, 63 and 66 or so. And we're just probably going to keep bouncing throughout here into the end of the month, and then we'll see some kind of real move either back below those lows or a continuation to all-time highs.
So you've got more conviction that we're looking at the bear crawl.
I wouldn't necessarily say it's a bear crawl. It's just you have a large move, as we saw a couple of weeks ago. A lot of panic selling, longs wiped out, panic.
What's the creature that sits between the bull and the bear? That's just doing the crawl. We're doing the crab crawl. Yeah. Okay, we got the crab that's come on the show. I think this is the first time that that creature's been mentioned.
Yeah, it's a crab market until proven otherwise. So we start seeing that said, you see this momentum break above 67K, especially during New York session. You don't want to fade it because that's probably a good indication that we're heading back to the highs, at least above 70K or so, or at least heading for a retest of that level. But you need to see that momentum come in. You need to see some spot buying volumes drive it. And we haven't really seen that. So even yesterday, we kind of hit this 66K mark, which is basically the upper end of this resistance, and it's kind of fading. So we'll see what today's session has in store. But for now, I think base case is just that we'll be chopping between 63 and 66K until the monthly close.
So that gives you an indicator of kind of what that range is in terms of moving forward, right? To try and get a better sense of what this may look like as we head into summer. I mentioned before when I was looking at the options data on Deribit, the May 31 strike price or May 31 expiry was kind of interesting. Not sure if you're able to bring that up, but I thought there was about 2.3 billion in notional interest, and there was a lot of interest around the call volume for the strike price of 81,000. And I guess I want to hear your take. Are you seeing anything from the options market? And same question I have almost every single day or every time we meet, that's starting to say how some of these traders are starting to position and prepare as we start to move into the summertime.
So this May expiration has been very interesting. We've seen a lot of flow into that, especially in recent weeks. We started covering about 2 weeks ago, and this call buying just went ballistic. I have it pulled up here. So currently there's 23,000 of open BTC notional call interest in this. Just 2 weeks ago, it was around 5,000 or so. So that's basically 5x'd in a short amount of time, showing that a lot of people are buying these calls or opening new positions in this expiry, betting on some kind of volatility move to happen before the end of May. Most popular among those have been people buying up the 69K call option. And I think these 80Ks are a lot of selling. So basically you buy the 69K, you sell the 80K, lowers your cost basis, capture upside, but it seems like a call spread that's being open there where they're long these, short this one. And that way you don't lose too much money if price just continues to chop. You can roll it forward. In terms of flow that we've seen from the options market. So there's been a lot of selling of June and then buying of later dated calls. So if you see here on the scanner, people were buying up December 80K call options and selling June 75K, which it's a bullish bet on the long term. So that's just kind of an expression, a way to express that we're going to be in this chop range. Maybe we go up to 70K and back down, but we're not really breaking past all-time highs or going parabolic anytime in quarter two. But then later in the year, that's kind of a bet on continuation to the upside later on, and it would just be basically in this never-ending range for another 2-3 months. They collect the premium on that June call and nothing really happens, and then they're kind of betting that we see that explosive move later in the year, so quarter three, quarter four, etc.
The explosive move coming later. Ben, I want to ask you, I'm not sure how much you've been able to see some of the ETF flows. We're starting to see some of the I think it's 13F filings, which is actually saying who's buying these flows. And there was an interesting post, I believe it was today, from Eric Balkanus. He mentioned that two of the buyers of IBIT, I believe, or no, sorry, this was Fidelity, was Legacy Wealth Asset Management and United Capital Management of Kansas. He was noting that these were some of the most boomer organizations imaginable, buying into these ETFs, really trying to silence all the negative press that's been going out there saying these are just the same degens that have been buying these products forever. Any sense, are you seeing anything from an ETF perspective that's giving you perhaps confidence this is going to continue to go? Or are we going to see some slowdown in momentum? Obviously, we've seen a little bit of slowdown from the actual inflows, although they're positive right now.
Yeah, I mean, they're definitely starting to not be as headline worthy as they were originally. And I think they are cooling down. They're tapering off a little bit. And we're kind of just meandering, positive and negative, it feels like, but just less eye-popping numbers. And I think that's okay. And right now, especially, I guess April. So yesterday we had positive flows. Looks like, how did IBIT do? And looks like FBDC did really well yesterday. This is a good thing, right? We're going into the halving. We've had a price correction. We're probably going to see this crab for a little bit, at least into May, I would have to imagine. And if you continue to see good flows, I think that's a really good indication for how strong of a second half of the year we could have, because we don't have, these good headline stats of new all-time highs. We're this percentage higher than we were to start the year, or everything that's negative is behind us, and we have great regulatory measures coming through Congress for the U.S. Individuals. You don't have all that positive momentum right now, and the fact that you do see positive flows right now, that's just really good indication of what's to come. So all the positives are still ahead of us, and yet we have good flows. So this is just a good setup for when price does start to heat up once again. I think we're going to see some major numbers come back. And the fact that you're seeing some of the entities that were mentioned also start kind of dipping their toes in the water, like that's another good sign. It's okay to go ahead and advertise that you have exposure to this asset for those organizations, and that's only going to continue. I have to imagine, anybody else that's seen them do that is also starting to, get the paperwork in order, to start changing the prospectus, to start making sure that their investors are okay with this exposure. And if they're not, sending them the material that has, great high gloss paper and all of the great sales.
All the marketing, yes.
Exactly. And so, this is just the machine warming up. We're still early. You're seeing all of the signs that we were expecting to take place, and they're happening. So as far as like everybody's expectation, once an ETF does get approved, I think we're meeting it. And the fact that we really don't, like, all the positives, especially on a legislation front, like they're still ahead of us. Again, once those things really start to turn positive, it's just a ton of upside.
Yeah, it's like we were saying last week. Like, basically, last week was kind of a crescendo moment of everything that could go wrong in the market was going wrong. We had geopolitical fears, hot dollar because of the inflation reports, et cetera. Like there was all these things weighing on it, and we didn't even break this range that we established in March, right? So that's pretty positive that we were able to absorb all that. We had tons of leverage wiped out, a lot of shorts piling in, range didn't break. So that's kind of a real show of strength. And once those things alleviate, which they will, like things just kind of move in pendulum cycles, whatever you want to call it, the snapback effect and the upside, I think it's going to be pretty massive in the second half of this year.
And it's a great cool down, right? We're having memes starting to cool down. We're having funding rates fully reset. We're having borrowing rates across the ecosystem reset. Like everything is just getting a great reset, probably for multiple months now, and just queuing itself up for another leg higher. So I really like seeing this right now in this stage of the cycle. And for anybody saying that like we're, the top is in, and I'm just ignore it. Sorry, like I just 1 + 1 is 5. Great, good job. Keep going.
That's people playing on 100x leverage. If it doesn't go with your position right away, it's over. It's never coming back.
Again, that goes into people just focusing on the day after the halving versus thinking a little bit longer term. All right, well, this is the most bullish you're going to get from Ben and from JJ in the reserve way. So enjoy this, soak it in. But I do want to take this opportunity then to move in to talk about outside forces, because obviously those can throw a curveball. We've talked about the fact that we saw that just a week or so ago because of the tensions in the Middle East, the geopolitical, then feeding into the dollar, oil, as well as rates. And the Fed now starting to talk about raising rates, or at least pausing on even lowering them. So I want to talk about outside forces. Before we do, I want to say welcome to everybody who's out there. Thanks for joining us today. We're here every Tuesday and Thursday. Love to have you here. Hear our commentary, share our ideas on setups. If you haven't already, definitely hit the like and subscribe button. If you're not getting notifications, make sure that bell is on in YouTube. That's the best you can do, other than just being here, because we've got the same time frame every single Tuesday and Thursday. And definitely share this wherever you're out there talking about commentary on the market. Link it in, I don't know, X or Facebook or whatever the kids are into today. Definitely share it everywhere you can. All right. I want to go into the outside forces. When I was looking this morning, Dixie still looks very, very strong, JJ. I think it was at 106 when I was looking at that. Oil was still kind of hovering around $80, and then we could get into rates. What's your perspective here that this is going to actually resolve higher at this point and really knock the wind out of the sails? We just talked about a crab walk. I feel like the crab could get crushed.
Yeah, it looks like DXY is crapping as well, right? Like it got really overheated in the past week, and now it's kind of consolidating higher. What we'd ultimately want to see is a breakdown here over the coming weeks. We have some major data coming out this week alone. I think PMI today, GDP on Thursday. So that should provide some kind of insight into what the dollar's next move is going to be. Apparently there was like an IMF meeting over the weekend. Who knows what they discussed? But we know that FX markets have been falling into turmoil due to the Dixie strength, right? So when Dixie's super strong, it obviously means that currencies in places like Japan and South Korea, et cetera, are weakened. And that causes them a lot of issues because of the hyperconnectedness of the system. So maybe there was some kind of backdoor handshake agreement that's going to weaken this thing, but we'll see it in the chart if so. If any kind of emergency measures have been taken in private, we'll see this flush in the coming weeks. And we don't really have that confirmation yet. So still just waiting to see. If I saw this break down below, like say 105 into the end of the month, I think that would be a pretty bullish signal. Below 104, even better. But right now, it's still just wait and see. Like I think this is leading itself to create more crab for Bitcoin ultimately as well. Like if we see Dixie rally in the coming days, we'll probably see Bitcoin go back down to that 63K range. But they're still like we're just waiting. There's not really much insight here. It looks a little bit heavy. Looks like it wants to fall, but I mean this thing's been on a tear, so you don't want to top call it just yet. But it's looking better than it did last week. It doesn't look as big of a threat as of now. That could change with a macro data point that comes out in an hour or so, in a few minutes.
Well, JJ, I want to ask you, you've talked several times, you can't imagine Bitcoin remaining strong with a dollar that's just ripping higher. Has that at all changed? Are you seeing any data or any relationships in the data that would make you say, okay, maybe there's a period in which it could continue to run hot, or at least it would stabilize here?
No, basically we saw Dixie top out and Bitcoin bottomed at the same time. So I think it's just that continued inverse relationship here. Like we see Dixie topped, Bitcoin bottomed, and then we see the bounce back, right? So if Dixie were to flush lower, I think that would be very bullish for Bitcoin. That could provide the momentum we need to get back above that 67.5 mark or so, the 50-day moving average, regain that trend momentum and run back to the highs. But I think we would see that flush come from Dixie, and that would be the green light for Bitcoin. And we're still waiting on that. So just wait and see how this week plays out. The potential's there. Like we said, there is the potential to run higher, and we could just do this V-shaped recovery, run back to the highs. I'm not really a believer in that until we get back above this point. And if it's well, there you go. Dixie's falling right now. So I guess that PMI number was favorable for markets. So maybe this is it. Maybe we're watching it in real time, right? Dixie's kind of flushing now. We'll have to see how the rest of the day goes, if it rebounds, but looks good. Looks like it's heavy. Had this massive run up. It's going to do some back testing, and then we'll see from there.
Ben, I want to turn to you and ask you a little bit about rates and liquidity. Looking at the relationship that we're starting to see with the 10-year, the 30-year, and looking to sort of normalize the yield curve. Do you have any expectation for, let's say, the next quarter or so that could really take the air out of the room for a Bitcoin run? Is that going to be some resistance? And maybe that's okay. You talked about the cool off just a couple of minutes ago, saying this is actually good. It just allows us to reset, prepare for a longer run later. I'm just trying to make sure people are prepared for that. Again, thinking on the right time frame. If they see those rates come up and we see some headwinds for Bitcoin's price related to yields.
Yeah, it's an interesting conversation. I'm starting to see, this. I think we mentioned it over a month and a half ago, almost now, that the conversation around just the possibility that we could raise rates needs to happen. And I think I heard it earlier was it yesterday or last week? The All In podcast, they actually started discussing it as well. To me, that's like it's starting to get closer to mainstream discussions. And so probably over the next couple of weeks, we could hear that continue and eventually hit like the Wall Street Journal or Bloomberg. And then that's kind of like your indication, like the market has started to price all this in. And now we need to think about what's next. And before I kind of get into that, I want to mention that the CME FedWatch site that I frequently use for the probability that rates might be whatever at some time in the future, they removed the new column. It was only up there for a day. So the fact that like the rates could be higher, and, like the probability that was getting tagged, and they've now moved it. They removed it off the and now this morning here we are. We're back. This is weird. It keeps going back and forth.
I think the intern needs to be fired. That's what I'm going with that. They need a new intern.
What's interesting on this move right now from Dixie that we're watching is the rates market isn't really reacting. So if we look at like December futures, if the market was indicating more cuts would be coming, this number would be moving up. It's just kind of stagnating here, but Dixie's falling. So this will be interesting to watch. Maybe this is just kind of a technical back test from Dixie. Let's see how the rest of the day goes, but not much movement from the rates market due to whatever data was just released that's causing Dixie to fall.
And keep in mind, like we have the conflict going on now over in Iran, and you also have this super tight correlation happening with the dollar and oil and even 30-year yields. Like I was going back in time, like let me pull up the chart, and I couldn't find a time when the correlation was kind of as tight as it is right now. Like this red line here on my screen, those are 30-year yields. The green is DXY index, and the black here is oil. And I also put federal funds rate. You can kind of ignore that. I was trying to see if there was a time when rates were elevated and correlation was high, and I couldn't really find it. And so down here is the correlation reading between the 30-year and oil. You can see how high it is right now. And this is like on a 30-day basis for anybody trying to replicate it. But if we go and look at kind of the day-to-day happening right now, you can see how tight it is. Like this is really moving in unison. And oil, this black line, is sort of acting as like this kind of the trend setter. And so if it does decide to continue to come down, like from a U.S. standpoint, that's great for inflation figures, right? They're combating inflation. They're reducing the cost at the pump. manufacturing costs are getting reduced. So now your supply chain costs are coming down, like all positive things that they really need to start to hone in on if they're going to avoid a recession down the road. And so this is a priority in my mind for the government to try to reduce these costs. And if you're going to go ahead and do that, that's going to bring the DXY down. And the red one is where I find interesting, is because we're just talking about the probability and the possibility of raising rates. Well, if you're going to start bringing the yields down on the 30-year, then you're basically signaling to the market that we're going to have to go ahead and start cutting rates sometime in the future. So it just having all of those things being juggled at the same time and kind of seeing the politics start to work out the way that they're working out, we have to keep that in mind, because if the DXY does give to the downside, now you just juiced everything in crypto to the upside.
If DXY breaks down this year, it's going to be nuts. Like if you see this go back below 100, it's going to be off to the races. I think that's coming. It's just like we're just waiting. Like we all kind of know it's an inevitability, but how long it takes requires some patience here. But I think
probably diplomacy, right? Some sort of diplomatic agreement is going to take place, and then you're going to start to see the chart start shifting.
Yep.
And that's like your cue. Like let's get ready. The engine's starting to rev. It's time to go.
Yep.
Exciting times for sure. 2024 is definitely going to be an interesting time. Okay, so the outside forces, we cover them really, I would say. I mean, we cover them every show, but obviously we have always greater insight, Ben, when you're on here to talk rates. They're the boogeyman that everyone needs to be looking out for, especially if you're crypto native and you don't want to spend any time looking at them. They are there, and they could be both the wind in your sails and also the trend wrecker. So more to come from there. All right, we can now transition into what I think a lot of people are asking for, which is, how do you position in these moments? I mentioned at the top of the show, we can talk mining stocks. We had a question here from, let me see, Adrian, or maybe, David C. Do you expect alts to run while BTC consolidates, which could be an interesting time to be getting into those? And then, of course, we're going to be talking options, because it's always something we want to understand. Are there potential plays that you're looking at? And with that, I want to give a shout out to CoinCall, the sponsor for this episode. CoinCall is the exchange you want to look at if you're interested in doing spot, perps, and of course options. They have a very elegant interface, competitive fees, and of course it is the exchange that JJ is highlighting in all of his options training videos, as well as on this show where we're going over the option chain and looking at actual plays that you can look at. Definitely check out the link in the description if this is something you're looking at. And as I say every single time, if you're on the fence of whether or not you actually want to be trading options, I do suggest you go open an account, be able to do some paper trades, get to know how the interface works, how options work, and study the price movements. JJ and I talk about it offline all the time. If you're not going to be in this and looking at the prices on a recurring basis, you're not going to have the feel for what exactly is happening in the market and be able to play those massive opportunities. He talks about, and I've asked him on this show, is he looking for alt returns or options returns? He's definitely in the camp options. So it's definitely something, if you're interested in making that investment time, it's definitely worth the investment. All right, let's come back to it. JJ, I want to bring up miners, because we were talking about it before the show about the opportunity to invest in miners. Are they mispriced? I do want to bring up the fact that they just had a gangbuster moment with the halving, with the amount of, with the ruins being etched. And, I'm not an expert on there. I've been dabbling, being in those spaces, but I do know that it pumped the fees for the miners. They saw a huge windfall in terms of cash coming through on transaction fees. I think it was the greatest they'd seen since 2017. They, of course, have been beaten down, I think, for months. And everyone, all the Wall Street investors are basically saying, listen, post-halving, which of these are going to survive? What are you looking at in terms of miner stocks? Is this a good time to be playing them?
I think obviously they've had a strong bounce back. They got extremely oversold, especially last week. I was pretty bullish on them for the past month or so, just kind of been martingaling my position, knowing that kind of a bounce back like this is inevitable due to the short interest, is that this was driven by basically since Bitcoin broke that 70K range. This was just a lot of shorts driving it down. You didn't see a whole lot of sell volume there. And it was just anticipation that the halving is bearish for miners, which I think is misunderstanding from Wall Street's perspective on how the dynamics actually work. Because if Bitcoin ultimately ends the year much higher, miners are going to have a lot more revenue. And especially if we see things like runes and all these different things that create value for miners and value capture, their profits are going to go up. And if we kind of look at here's a good chart. This is the Mara to BTC ratio. And you see how really beaten down it is compared to BTC. It's at basically like FTX lows levels. It's off it now. So maybe you get like another chance to buy closer to the bottom if we see like a 63K retest in the coming days. But I think overall, this is probably a good level to have some exposure. And the thing to remember of miners is like you always want to be in and out. I don't really view these as investments. I just kind of look at it as like, okay, this chart looks like it's going to bounce. And then when it bounces, I'll get out. But they're moves, right? Like you can get 20, 50, 100% moves in a day from miners. So you kind of have that altcoin type effect because they're so low cap, high short interest, etc. You have a lot of crazy things that happen in these markets. Like if you look at this, just the amount of volatility that's here, it's a great product to trade. And I think there's opportunities when it gets as beaten down as it did last week. It's probably not going to just continue up in a straight line. I would like it if it did, but I don't think that's the way this is going to go. So you probably have another chance to buy. I'm just looking at Mara. You can look at any of these. I think Wolf is good, CLSK. These are my three favorite.
What? So in terms of a trade perspective, as you just mentioned, these aren't buy and holds. These are really a buy and trade. All right. Would you be looking at just buying the equity, holding it, looking for a breakout? Are you looking at potentially putting on a trade? That would be more from an options perspective. How would you structure that?
I've been playing options in and out on these, but I think like that can be more complicated because they're so volatile. But I think if you look at this and you kind of see, like, say, I'm just looking at Mara, but you could pull up all their charts look basically very similar. So you kind of find like some kind of support lines here. Wolf probably around 250, 220. You could probably get in that range in the coming weeks. Mara, maybe you get in around 15, somewhere around there where your risk reward is a lot lower than if you were kind of buying here after it's had a 20% run up in days. And then you look for a rebound, like say to that 50-day moving average or something where you can get this kind of snapback effect and the market levels. And if you look at it against the BTC pair, you might be targeting something close to like 0.04, 0.05 Mara BTC. But I think they're just beaten down in dollar terms and against BTC terms. And especially if BTC regains that momentum, BTC makes new all-time highs, these things are going to go absolutely ballistic because it means that miners are making a whole lot of money. And the trade that everybody hated pre-halving will become, people will be talking about how it's the greatest investment of all time in short order, as markets do. They hate it when it's low and they like it when it's high. So
yeah,
you look for those opportunities where it's as beaten down as it got over the past couple of weeks. And you just see the way this price tends to rubber band over time. Like these movements are in very short periods of time. I think last year, like BTC broke out above 30K in October, and we saw the miners, like this is Mara, but they all tend to follow the same correlation. So miners kind of stagnated, and then it wasn't really until late November, December that we saw this massive run up, and it basically like 4 or 5x in a matter of a few weeks. So you can really get insane returns in a short amount of time, so long as you're in and out on a shot clock with these.
Well, so JJ, thinking about that shot clock, when I hear that, it can sound like almost like on a weekly basis. But if you look at some of the trend lines you've just shared that's on your screen right now, it could argue that if we've got a crab walk that goes for a couple of weeks, this could be a good opportunity to DCA into the equity and look for that pop. I'm not sure if it's going to happen in the next quarter or 2 quarters. How do you think about horizon there?
So I look at it as a proxy of BTC, right? So if Bitcoin starts to make new all-time highs, I think the ability for miners to outpace those returns are much greater. And if we look at 2020, the halving was in April of 2020, and then we saw this big breakout in July, August, like the summer months, right?
Mm-hmm.
So you're probably targeting somewhere around later in Q2, Q3 for a big breakout here for miners. So if you kind of know that's on the horizon, you're not over leveraging yourself or playing super short dated options, I think you can make some pretty lucrative returns in the coming year. If Bitcoin does ultimately break out and go above, say, 80K, I think the returns on miners will be pretty juicy.
Okay. I like that. Juicy sounds good to me. I do want to get into options for both Bitcoin and Ethereum. But before we do that, Ben, I want to get your perspective. We had a question here about I think from David, do you expect alts to run while BTC consolidates and we have a crab walk? You've talked many times on this show. You're not an ETH maxi, but you definitely see substantial upside. Part of that being the narrative of just all the infrastructure being built around Ethereum and the security model. Do you see the potential of being a good opportunity to continue to build a position into Ethereum if someone believes in that thesis, or is it mostly holding on to BTC for the time being? How do you think about that question and answering that from an investment perspective?
Yeah, it's a good one. So if we think about it from risk curve perspective, if Bitcoin's kind of the least risky crypto asset to own, and Ethereum is the next step down, where do you want to be at this moment? I understand a lot of I see on the timeline a lot of folks are trying to go ahead and get back into memes, but it just always reminds me of just you're trying to average down on a meme coin that isn't going to run hot. It's kind of had its moment in the sun, and you're going to eventually have a Telegram channel just full of an echo chamber of people hoping that price is going to go up. And I always ask, like, do you want to be a part of that? Probably not,
Is
right?
that the future you have envisioned for yourself?
Yeah, pretty much. And it's, do you want that, or do you want to go ahead and understand that you are positioning yourself on a risk curve where you will be in a good position moving forward? And I think that's the way you have to look at it. Like, we're having a reset. Capital is going to flow back into Bitcoin. Then it's going to go down into Ethereum in L1s. I understand that Ethereum and most of the large cap L1s did not have a good run outside of Solana, which was completely beaten down because of FTX. So that was an anomaly. But the L1s the alternative L1s haven't had their big move in my mind, but that doesn't typically happen until after the halving. So this next kind of cycle of capital flowing through crypto, when you want to have that kind of L1s in mind outside of Bitcoin, Ethereum, that should be on your horizon. So start looking at those tokens. I know Cody, he's coming back on the show soon. He's been hard at work working on what we call token ratings, a bunch of models that go in and evaluate fundamentals of tokens and their strengths. He's a big fan of Sui, for example. He's been looking at their ecosystem. He was also a big fan of Solana back in the day and understands some of its shortcomings now. And like, that should be on your radar, looking at those ecosystems, seeing the protocols they're building, how is their native asset being used throughout the ecosystem. These are the questions you need to be asking yourself and finding those answers to better position yourself when the time comes. Is it now during this crab walking? I don't think the sentiment is positive enough to where, if Bitcoin's going sideways, like, you want to position yourself further out in the risk curve to get those altcoins. I think that moment happens when the general sentiment is that Bitcoin's moving higher, and this is just a consolidation aspect. This is a cool down. The market went really hot, so it's a bit different than what we've seen over the last 9 months or so, when Bitcoin kind of goes sideways. And then you have alts starting to run hot like that. Those are consolidation timeframes, and this is a cool down. So kind of have that understanding. And when the market does start to light up again, I do believe that L1, large cap L1s, is going to be where you want to be.
Okay, so just to kind of hit on the answer to the question of will we see an alt run right now in the crab phase? Likely not. Anything's possible, right? But the likelihood sounds pretty low. So this could be a good opportunity if you're in BTC, let that run, and then be looking for some of these L1s, higher quality projects that are really going to see an uplift later in the year as we start to see the market expand.
Yeah, I think that's fair. Like, yeah, you might get 25% return in the next couple of weeks on a token, on an alt, and Bitcoin maybe goes up 5 to 10%. Is that worth it from a risk perspective? I say no, right? You're making that trip down the risk curve because you're gonna, outpace the move that Bitcoin makes by 4x or 5x. So at the moment, I don't think that ratio is right.
Yeah. Okay. Well, hopefully that gives people some perspective if they're looking at getting into alts. And definitely, I guess, if you're thinking about those L1s that could be powerful, perhaps this is a good time to be looking at DCAing in. Again, timing all this stuff, no one has a crystal ball, right? So we're just trying to give the probabilities to help people understand and put into their own framework. How do I think about deploying some of this capital? So, okay, JJ, we've talked now about mining stocks, which could be a good opportunity again over the next quarter or so. Ben just talked about L1s being powerful. And again, we're going to be bringing Cody back soon to talk about some of these higher value projects, which I'm very excited to do. Let's end this with a discussion on options. Are there trades both on the BTC and Ethereum perspective from an option standpoint that you are looking at that seem juicy enough to make the trade?
Yeah, this is a pretty interesting area. So I'm just kind of digesting the price action as we're speaking here. So we see DXY moving lower, BTC creeping up. And this is interesting because we're kind of in this short gamma pool area now. So if you look at this is our short dated calls that dealers are currently short, right? So 66K, 67K, 68K. So if price moves beyond these levels to the upside, we could see some kind of rushed hedging here. This was kind of a scenario we outlaid last week. So similar to what we saw at 54 to 60K back in February, where dealers were short a lot of calls, and then we got that explosive move to the upside. Don't know if the market's ready for that yet. That's what I'm kind of trying to piece together here. So like that's going to work as resistance at least through Thursday, in that the dealers want to keep price below basically 67K or so. They don't really want to see that breakout come too soon here. Whether or not this weakening Dixie is kind of providing a spark here, and we're seeing increased buy volumes. Seems like Coinbase is buying some. Let's see. Yeah, so we see like pretty good morning action here, but it's dependent on this continuation to the upside if we're actually going to see 70K this week. If we look at the April 26th expiries, which are this Friday, there's obviously a lot of call interest around 70K. And if these were to get in the money, it's kind of an outlier scenario. Like these larger call walls work as resistance because you ultimately have dealers short that and they're going to protect that position. So don't know if we're ready for that move, but it does seem like, and also what we see here too is implied volatility isn't rising. So price is rising, but this is telling you that dealers aren't really rushing to cover those positions yet. It's not really signaling that we're going to have that squeeze effect. Because if we were, they would be buying calls to hedge that position, and you would see this kind of shoot up. So there's not really that rush to hedge here yet. If we look at some calls, I wouldn't go with anything short dated.
Yeah. So, let me break in here. I mean, given that setup, knowing that we could have something explosive, but also not really seeing those signs. I mean, is this a pretty low conviction play? If you're going to put something on, would you instead wait to see how this resolves itself?
So the beauty with options is you can buy yourself time, right? So ultimately the market, like especially we see this falling Dixie. If this is going to continue into May and maybe we do just continue to chop, you can structure this intelligently. So that's not to say you go out and buy a call that's expiring Friday, expecting us to go back to all-time highs. But like these May 69K calls, they're not too expensive right now. And these aren't going to lose a whole lot of value if we just chop between 65 and 67K for the next week or so. So you could do something like buy this May 69K call and kind of wait through the day. If we see kind of some downside action, you could sell some April upside here. You could sell the April 69K call for 600. That's going to lower your cost basis on the Mays. I think there's some ways to structure this, but I do think you want to ultimately have long call positions to out further. So you could go anywhere May through March for now, or May through December. And like I said, we've seen a lot of call spread buying, which is where they're selling June expiries and buying later in the year. So that's telling you that the market's finding some kind of value in this volatility level, right? Like it's the implied volatility's fallen a lot since we reached that all-time high. It's kind of been in this chop channel here. And maybe it is going to explode to the upside in the coming days. We'll have to wait and see. The setup's there, but it's dependent on everything else playing along and this move being followed through above 67K. So the setup is there, and I do think you want some long exposure by way of options. The call premiums are down massively from what you would have been paying on that first 70K break back in March. So we've gotten a nice period of chop here, which took out some euphoria from the market. So if you're looking at these, like I think these May calls, these are very popular. A lot of smart money is evidently flowing into them. You could take a play on these and just be prepared to hedge your position one way or the other if we don't see follow through above 67K. probably by today. I think you would, if that explosive move was going to come, it should probably happen within the next 24 to 48 hours here.
Okay. So looking at more of the May expiration, May 31, it appears, and looking at something that's a little bit out of the money slightly. What about Ethereum? Do you see a different play there based on the price action?
I think Ethereum will follow. I think the market's still obviously waiting on that release point of when they finally come out and say, hey, we're not approving the ETF. And then you see algorithms sell it and whatever. But ultimately, Bitcoin breaks up higher. Ethereum's going to trail with it. Probably, I don't think it'll outpace it until later in the year. But I think at these levels, like if you're anticipating 5K ETH and beyond, the call premiums, the same as Bitcoin, they've had a lot of euphoria sucked out of them. You could buy these 3,500 calls for 800, and I think that's a very good risk reward ratio through the end of this year. And I think these will print massively by the time the end of the year ultimately comes. Like, that's not a whole lot of risk, and I think you're looking at thousands of dollars of upside for $850 of risk. There's a lot of time baked into this. And again, you could sell, like, say you think that ETF news is going to be bearish, cause the market sell off a bit, you could buy some put protections or sell 3,500 calls for May for 185, lower your cost basis on those December call options. But I do think you want to be long upside volatility in both assets and just look for ways to hedge them in the coming months, whether that's buying short dated puts, selling some calls expiring in May or June, and just going further out. Or if you want to be a bit more risky and bet on that explosive move coming here in the coming days, I think you would go to May, and that gives you some more. It's like a chess piece, right? And that if price does expand in the coming, say we get a move above 70K by Friday, you can sell shorter dated calls against that end of May call and collect premiums if we just end up going to 70K and then chopping back down. So it gives you a lot of flexibility for not a whole lot more risk capital upfront.
Myriad options, no pun intended. It looks like the Ethereum play is an interesting one, especially for those who are looking at the bright side of Ethereum being further down the road. For all those who just listened to this and were intrigued, but perhaps still have a lot of questions, definitely check out JJ's options educational video. He's so excited inside. He's stuck on Joker, just thinking about the amazing things you're going to learn through that. He's got another video coming out very soon, so definitely check out this channel, like and subscribe so that you're aware when it comes out. And as I said before, if you're interested in starting the options journey, definitely check out the coin call link in the description. Open that account, do some paper trades, follow along what JJ's doing. It will make a lot of sense to you, and you can find some new opportunities for your account. And with that, we're going to wrap up today's show. It's going to be an interesting time, folks. We just had an amazing halving. Now we're going to be moving into a crab walk period, perhaps, maybe some explosive moves upside. And then, of course, we have the ETF action, which continues to surprise to the upside. So exciting times. JJ, Ben, appreciate you guys coming back, dropping the alpha. I want to thank everyone for joining us every Tuesday and Thursday to hear what these guys have to say, learn how to add to your portfolio, how to structure it, make the most of your investments. And I will, as I always do, leave you with the same PSA, which is to have some dry powder. Those opportunities are down the road. This is Marconi White signing off.